We got to look here because now we got a double bottom there.
Order submitted.
Do I recommend prop firms or staying away from them? My win rate on my scalps usually remains above. Will the stop loss be greater than the take profit? Yeah, most of the time, yes. Most of the time, yes, because we are scalpers. So the way that we trade is basically like this. When we take a trade, we're scalping a portion of the trade, usually about 80%. So a lot of times what you're going to do is let's say you're trading with 5 contracts. You're going to take your trade and you're going to exit 4 of the contracts for a small profit and then move your stop loss to where you entered. So it's a risk-free runner. And the other 1 contract, if you were trading with 5, let's say, or 20% of your contracts, whatever you're trading with, 20% will be a runner that you might get a huge move on, right? So like you might take a trade like this. Let me just show you. So if I pull up my risk reward, let's say we're going long. I'm just going to make this like 0.3 just to make this convenient. Let's say this is your trade right here. You might have a pretty big stop loss like this and only a small profit target for 80%. But once the 80% gets filled, your stop loss moves to right here. And now you have a risk-free runner, in which case you might target way up here with 20% of your position. And it works out to where you're risk-free on it. And then as the move is going up, you could trail, you could even maybe be targeting like way up here, let's just say, like way up here. And you could just be kind of trailing below some of the recent swings. And so now at this point, let's say this move goes way up and you end up with some sort of, let's just say you end up with some sort of a trend line that looks like this, right? And you're just trailing the trend line and then finally the price breaks down here. Well, the reality is you now got 5 points on 20% of your contracts, which is pretty sweet, and your stop loss initially was only whatever it was, 2 points, on all the contracts. So you took 1 point on 4 contracts, so you got 4 points right there, and then you get another 5 points on your runner, and so you actually get 9 points on the trade. Whereas but your risk on it was down here, was going to be, so that's kind of how that works. Like that's how we do it as scalpers. So it's high win rate trading. You're trading with a high win rate. But yes, if you take a loss, they do hurt. So you have to be aware of that type of strategy. It's a little bit of a different style. You can do modifications. You can go for a 1-to-1 risk reward or do something a little bit different, but you will have a lower win rate if you do that. There's an interesting question here. I would say this. I would say tick chart is better than volume because the speed at which the transactions are happening has to do a lot with the market participants that are making trades, how many market participants are involved. Whereas a volume chart, you might have an institution that does some really large order. What if they do an order that is 500 contracts in one order and it does move the market, but it's only one participant that makes that one order. And then after that, we have a bunch of other participants. Some people would argue that it's significant. Some people would argue that it's not. I think that the number of transactions that are happening is more significant than the volume that's being transacted in there. And if you pull up a volume bar, if you pull up a volume, a volume indicator to go with your tick chart, you'll notice that the volume doesn't shift that much on the tick charts. So one thing I found was I used to plot volume at the bottom to go with my tick charts to see what's going on. But the reality is the volume doesn't really fluctuate that much within the transactions because you're always going to have a whale who comes in and makes a big transaction, and you're always going to have people who are only trading one contract. And the reality is the volume doesn't fluctuate that much per 2,000 tick candle, not enough for it to be that significant. And so because of that, I found that looking at volume wasn't actually that significant to me because it's already implied in the tick chart movement itself. So that's at least my take on it. Some people would argue differently. If you do a volume chart, which we could look at one, maybe it would be kind of fun. Let me try this. All of my stuff is still into place. This is a volume chart now. I changed it to 1,000. I haven't back tested to see like what, or sorry, I haven't compared. How many, I just want to look at a spot of the chart. So, and then we'll go back to our tick chart to that same area. All right, so here's the 2,000 tick chart. Move down, close outside, another move down, it moves a little sideways. On the 1,000 volume, there's more bars, so I'd probably have to experiment with it. But you can see it's really not that different. Like, even my trend lines are kind of fitting in the same spot. And this is 1,000 volume. I don't know what it would take to make it more similar, but some people argue that this is the way that you should look at things. And I'm not saying that it's wrong. Here, I'm going to X out of that. So that's the volume chart. I do think you can trade with volume charts or tick charts. I think you can. But I think that there's, like, I guess your mileage may vary would be my answer. I don't want to mess with volume charts because tick charts work so well for me that I like it. And that's the other thing too, is like, if you get a volume bar that's huge because like in the overnight, somebody executes a giant order, right? What does that really tell you? It doesn't tell me a whole lot, like, because it's going to reflect on the tick chart anyway. So anyway, that's the way I look at it, at least. Do I recommend prop firms or staying away from them? Look, when I started, I used cash accounts only. The prop firm thing wasn't popular when I first started doing this, so I didn't mess with it for a long time. I've had some positive experience with it, so I wouldn't say that I recommend or don't recommend, but what I would say is this, like, I can't really recommend them to most people because the thing is, like, they really are a little bit nefarious in their marketing and the way that they promote things, and they kind of encourage a lot of bad behavior with the way that they structure things. Like, they let you over leverage, and they let you trade with way too big of a size with how small of a drawdown you're allowed to have. There's a lot of stuff that I just don't really like about them. However, I will say, if you're very disciplined, they can be a good tool to protect your real capital, because you could trade on the simulator for a while, and then after you trade on a simulator account for a while, they are like, it could be a way to bridge the gap between like trading with your actual cash. So if you have enough discipline to trade it the way that it should be traded, as like a bridge between simulator and your actual cash account, then I think they can actually be a really useful tool. I just think that hardly any traders actually treat it like that. So I always say that they can actually be really great tools if you use them properly. Most people don't use them properly. So that's just kind of my take on it. Hopefully that all makes sense to you. Oh yeah. I'm so glad I got to do that at the end of the stream. Thank you, everybody. Thank you. Oh, man, that's too good. That is too good. We hit our goals. We hit our 50 like goal. We hit our subscriber goal. We smashed the subscriber goal. Thank you, everybody, for making the stream super fun. I love that. I appreciate you all. My win rate on my scalps usually remains above 90%. And then but runners is a lot lower. Like runners, I don't get runners most of the time, but I get them sometimes. But as long as you're reading them price action properly, your win rate should stay above 90%. As long as you're reasonable about your targets, right? With respect to the 21 period ATR, if you start going for too big of a target, that's where the problems can start to arise, right? Then your win rate's going to drop. When I trade too many trades a day, my win rate is lower. That's why I only trade with like 1 to 4 scalp trades per day. It keeps my win rate higher because it makes me highly selective about what I'm going to choose. When I was taking more trades, when I was taking like 10 or so a day, my win rate was lower. So, you know, I'll just be fully transparent about that. The reason I trade only 1 to 4 trades a day is because I literally do better. It's just, I know my personality. I tend to read the market better if I'm more selective. So, you know, that's how I look at it. Honestly, I don't think that that's that hard to do when you really learn this system. It just takes time to get there. And I think the biggest problem is that most traders early on in this, they just take too many trades. And I can tell you, when I first started watching Mac, I didn't realize that when he was marking all of the trades, that like he himself has even said that he only takes like 1, 2, maybe 3, he says, in a day. He says he rarely even takes 3. I'm kind of on the same page. A lot of times I don't take more than 3, but I will take up to 4. And I didn't realize that until more recently that was his style. But early on when I was following Mac and following price action, I would see his chart and I would look at a chart like this and I'd see all these arrows and I'd be like, man, that's a lot of trades that you could take. And originally I thought that I should take every one of the setups. And before I knew it, I was over trading. And that was causing me to have a lot worse win rate than I should have. You can trade any asset effectively if it has enough volume, right? So you can trade NQ, you can trade gold, you can trade crude oil, you can trade the ES, you can trade the YM, you could trade all different futures markets. Like I could hit this drop down here and I could pick one of these other futures markets and I'm sure I could trade it effectively. As long as there's enough volume on it. I could choose one of the indices, I could choose, I'm sure I could trade one of these futures markets and be totally fine. I could just pick one and the price action will work on it. I'll have to figure out what tick size I want to use and stuff. Obviously, like if I was trading NQ, I would probably use 1,000 ticks, not 2,000, because it has less volume than the ES. So a 2,000 tick chart in the NQ would not work as well. We actually pulled it up yesterday on the stream, or maybe it was on the call. I think it was on the actually the call with the paid community. We pulled up a 1,000 tick NQ chart and we analyzed what it looked like compared to the 2,000 tick ES chart, and it lines up pretty well. So you can trade anything like that. The problem that you run into with NQ is that because it has a little bit lower volume and it's only tech stocks and it's super high volatility, what happens a lot of the times is that it has huge wicks. And what'll go on is that people will try to trade it with like my price action style. They'll put their stop loss where it's supposed to go and it'll wick through and still go where they want. And it's just because of that. I don't mind, like if you want to trade crude oil, NQ, whatever, it's all good. It's all good. I just think that for most traders, the ES is more stable. Like it's just a fact that it is. It has higher volume and lower volatility, so it's more stable. But it still has enough volatility that you can get really nice trades. And you don't need it to move very far to get a nice trade because each contract the tick size is $12.50. So if it moves 4 ticks on one contract, you make $50, right? On the NQ, it's $5 tick size. So you need it to move whatever it ends up being to make $50. It ends up needing to be a lot more. And that's okay. I mean, the NQ does move more than the ES, so it's fine. But, you don't need it to move. People have this misconception about the ES, but the reality is the tick size is pretty large. And actually, the contract requirement is that it's only half the margin to get into versus the NQ. So you can actually trade with 2 ES contracts for every 1 NQ contract on a cash account. So that's a big difference. Think of it like this. If I'm trading with 2 ES contracts, and it moves 4 ticks, I make $100, right? If I'm trading with 1 NQ contract, I need it to move a full, like 5 points to make $100. So it's a pretty big difference in the actual movement there. If I'm trading with 1 NQ contract. So that's the whole idea. So it's different, but I also think that by specializing in one and just looking at one chart, you're going to do better as a trader because you're not trying to focus on all these other things. So that's just kind of my spiel on it. I think you can trade whichever one you want as long as you adjust the strategy accordingly. So, and you can be profitable trading all of them. You just have to adjust the strategy accordingly. I just think that the NQ can be a little bit too volatile for most traders. And I think it's like there's a lot of YOLO mentality in it. A lot of traders are coming into it. I actually think the NQ is literally harder to trade than a lot of these other markets because of the extreme volatility. So that's just, if you're trying to go for consistency, I just think you're better off trading with something that's more reliable with more volume. It might take a little longer to make a huge amount of money, but that's okay. A lot of these traders are coming in these days and they're starting on NQ, and I think a lot of it has to do with the rise of the prop firms, because when I was starting out in 2017, nobody was really talking about prop firms. Everyone, I just traded with a cash account. That's still my main focus. The prop firm thing was not popular. I think when the prop firms got popular, it like, and NQ got popular because of Nvidia and all these other things, and it started to move like crazy. It made people really interested in it because you could trade with a prop firm and make like thousands of dollars in minutes or seconds even, and it like made people like way stoked on that. So a lot of traders started to focus on trading that using prop accounts, because it's harder to trade NQ with a cash account because, one, the margin is twice as expensive, right? It costs, on a cash account, it costs $1,000 just to enter an NQ trade. So you really need like $2,000 in your account just to do it. And on the ES, it's only $500 to enter a trade. So you could literally enter with 2 ES contracts for every 1 NQ contract. That makes a big difference. But with the prop firms, a lot of them don't restrict you. So you have people trading a prop account that says, oh, you can trade with up to 10 contracts. But that's crazy, because you could trade with 10 ES contracts on that account or 10 NQ, but you would never be allowed to do that on a cash account because NQ would be twice as expensive. So you got these traders super over leveraged, and they don't even realize that they're over leveraging because they're probably watching somebody on YouTube who showed them that this is what they should be doing. And they're like, oh, cool, I'm going to trade NQ and I'm going to like trade with 10 contracts. And it is an insane position size that most people are just not ready for. And then they get one win and they're like, that was amazing. And then they're addicted to it. And it's just not what trading is supposed to be. Like, you want to be focused on incremental wins, consistency. If you're, even if you're going to trade NQ, I think most people should be starting on the micros with that, which again, the micros didn't even exist when I started trading. They didn't come out until I think like 2019 or 2020, something like that. I forget what it was. I think it was 2019. Some like midway through 2019, the micros came out. So that wasn't even a thing back when I started. But with the ES, you could trade the ES. It's way more consistent. That's my take on it. That's my spiel. I think options are just a waste of time for most people. Futures, I think, is superior because with options, you have to look at other things. You got to look at theta and all this other stuff and deal with all that. Also, there's better tax benefits on futures trading versus options trading. I won't get into all that. And the technology itself is better for trade execution. A lot of the options trade execution is pretty trash from what I've seen. I'm sure there's platforms that are decent, but with NinjaTrader, ATM strategies, man, or like Sierra Chart, like their automated trade management, or like multi-charts, man, these platforms for futures are so superior in so many ways for how they execute trades. I just could never trade options after trading futures. Did it take me a long time to get to a consistent 90% plus win rate? Yes, it took me a very long time. In fact, it took me years to get consistently there. I would have periods of time where I was there, and then periods of time where I wasn't. So I'd say it took me years. And the reason it took me years is not because of the strategy itself. It's because I used to abandon my strategy and try other stuff. And I would get distracted. I would try to be like, oh, you know what, I'm going to do this other thing. And I would get distracted by the shiny object syndrome that plagues so many traders. So it wasn't until I fully committed to only doing price action trading, only on the 2000 tick ES chart. When I went all in, it happened for me way quickly. I was ready for it because I already understood price action because I had learned it. I just had to work on my discipline and work on myself. The strategy itself wasn't the issue. The problem was my own behavior. So it didn't take me that long to actually learn how to analyze the strategy. I think that you can learn how to read the price action in a couple of months. I think some people think that you can learn it in like a month. I don't think that's true. I think like the way I designed my course, for example, was meant so that you could repeat it and go back and do all that. And I think it's really important that you go back over time and do that. Go back and review it because things click over time. So I do think it takes maybe 2-3 months to really learn how to read the price action properly and have the strategy down. You'll still develop it more. Really, in like 6 months, you'll be a master probably at reading the price action. 2 to 3 months, you really get it though. But then it takes a while to develop the right habits in your actual behavior and analyze all your patterns, stay on track. But once I committed to it, then it happened for me pretty quickly. We got to look here because now we got a double bottom there. That can actually act as a new low, but it's probably going to actually make a new low here. Now we do have again, pullback first entry long. So man, if we come down here, we could get a two-legged move. Second entry long. Let's measure it out. That would be pretty epic. Because you could, that would be if we got that, perfect 2 legs back to the trend line, that could be a pretty nice setup. We're so close to the key level, so let me zoom out and make sure I got, that probably is, yeah, that key level looks like that's right. So we're really close. I mean, this is one of those, is close enough. You do have to be aware of what's going on here, because this is pretty bearish, right? This is pretty bearish. I mean, if you draw this off those closes, you do have to be aware of the possibility of this thing being a little bit, you know, something like this. You do have to be aware that this could be a wider down channel. So that is a factor. That is a factor here. You got to be aware of that.
Order submitted. Order filled.
But we'll take one just for the stream. This is a riskier. It's a little riskier because it didn't quite come off. So at best, we're green arrow on this one. I love this. So you're asking about the risk reward. The way that I trade is based on a scalp strategy. So what I do is I enter my trade and I'm scalping out a small scalp based on the 21 period ATR. So I'm going right now for close to about half of the ATR, which actually it's really low right now. It's less than a 2, and then basically that's 80% of the position. And then when it hits the scalp target, we move our stop to break even. And then we leave a runner way up here. And we might move that runner like even higher. It just depends on what happens. That's how I do it. I always say that you should have at least $1,000 in your account for every ES contract you're trading at a minimum. So it really just varies. It's going to vary and it's going to be different for every person. I'm going to move that manually instead of letting it tick through because I just got filled on the limit order. But I'll move that manually. Usually I let it tick to 5 ticks and it automatically moves my stop loss to break even. But because we're stuck so sideways, I'm just going to move it to break even instead of waiting for it to tick through. Just to protect my position there. But there we go. Hey, that was a funny trade. It took, how long did that take? I think, all right, I just got stopped at break even on the runner. Dude, that took 19 minutes, I think, or something. But let's see. Let me check my fill there. Hold on. So 8 contracts for 4 ticks and 2 that just were scratch break even. So 8 contracts for 4 ticks. Nice. I started trading in 2017 and I was like I was still working a full-time job at the time, but man, I was trading a lot even then. So it's almost embarrassing to talk about like the way I was. Like I'd be looking at it on my phone. I'd be like up in the night, like, you know, getting up because like at the time, like my daughter was really young. I'd be up like, you know, baby would wake me up in the night and I'd be like feeding her a bottle and like I'd have my phone set up and I'd have my headphones on. I'd be watching trading videos. Like I was so into it, when I got into it, but I was almost overdoing it, right? I was like a sponge taking in as much stuff as possible. It was a really beautiful time though, because it was like when I found trading back in like 2017, I was like, I remember I said to myself, I was like, you know what? This is going to be my thing. I was like, I am going to be a full-time trader at some point. I'm going to get out of this career path that I'm in. I'm going to get out of this like corporate style work that I'm doing. I wasn't working like super corporate. I was working for like more like tech marketing startups. So it was a little bit of fun, you know, and everything. And there was like a little bit more flavor than it being super corporate, but it still wasn't my thing. Like I didn't want to be in meetings all the time. I didn't want to be like, you know, doing all this stuff, answering to like clients all the time. Like I wanted to have the freedom that I knew that trading could generate. but I knew it was going to take me some time. I had to support my kids, my family. There was a lot of stuff involved. So it took me a while to get like fully all in, but I got there. And the goal never changed from 2017 onward. If I take a loss, do I stop for the day? You imagine I do because it's a decent loss. No, I don't stop for the day if I take one loss, but I do stop for the day if I take 2 losses. So the way I look at it is I have a 2-loss rule, which is if I take a second loss, I am done. Because my strategy has a high win rate. I should never have 2 losses in a day based on how my strategy works. If I have 2, it means that there's something way wrong with the way I'm reading the market. But I might have 1 because I'm human and I might just read something wrong, and that's okay. Like, I'm not perfect. I might get trapped. I might read something wrong and I might take that loss, and then I still might make the money back with, 1 win that gives me a runner. So keep that in mind too. Yeah, 90% of traders, they are ego trading. I just see it all the time. Like, I see these people. I also see people that are like taking these trades where they like trade with this like ridiculous risk reward ratio where they're trying to trade with like a small stop loss and a huge take profit. Tell me, how many times have you seen a trader that trades like that actually let it go all the way to their take profit and just let it actually do it, right? Somebody answer this question for me. Do you know any traders that trade with like a 1-to-3 risk reward ratio, right? And like where like their stop loss is right here. Let's say their entry is like right here and their take profit is like up here, and they actually let it run up to that take profit all the way before they let it run out on a limit order. How many traders do you know that do that? I'm going to say I know 0 who actually do that. What I see traders doing sometimes is when it moves up a little bit, they move their stop to break even. Well, that right there changes your risk reward. That's not 1-to-3 anymore. That's a whole different risk reward now. Or I'll see traders, it gets like to like a 1 to 1.5, and then they just close their position. They don't even let it go there. How many traders do you know that actually let it play out like that? And I'm going to say personally know 0. I know traders who trade with a 1-to-1 risk reward ratio and they let it do it. I know traders who move their stop to break even and let it run. Stuff like that. Or they do what I do, where they have a bigger stop loss and a small take profit, then they scalp and then they leave a runner. I know traders who do that, but I don't know any traders that I've ever seen who actually trade with these big risk reward ratios and they actually let them play out. And, I think that part of it is like it's a little bit of a lame thing because, like, think of it like this. If I was trading with a giant risk reward ratio like that, I could take a trade right here and take a loss and just go, oh yeah, well, guys, like, that's okay because I only need to make 1 winning trade to make that back. It's like, it's almost like a cop out a little bit. To me, it's like, well, your strategy probably isn't that good if that's how you're trading. Now, I do think there's times where you can trade that style in a more fundamental way. Like, I know some traders that I've seen who are like more fundamental style traders where they're trading based on specific stuff like earnings and things like that. And they're taking tiny little positions so that they can catch the edge of an extreme with a news release. I think it's risky, but even if those people trade with like a 25% win rate, if they can like get like a 1-to-9 risk reward ratio and it works for them. That's a different type of trading. I don't mess with that stuff. But I'm just letting you know, like, just going off of what I've seen, what I've experienced, and I've dabbled with it. Back when I was programming algorithmic bots, I tested those types of things. I found strategies that had like a slight edge, and then I'd run them with like a bigger risk reward. And dude, it just didn't really work long term. So that's just my take on it. So if you know anybody, or if you personally trade with a risk reward ratio like that, where you actually let it play out that way, and you actually trade with like a 1-to-3, and you really do, and you really let it fully play out every time, and it works for you, let me know, because I'd be curious to hear, because I've yet to meet somebody who actually trades like that. I've yet to meet somebody who actually does it and has confirmed that it works for them. And I'm not asking you to show me anything. I just want to know, like, anecdotally, has it worked for you? Like, that's it.